Buying in a hot market. What is a hot market? Well, a hot market is very, very competitive. It's advantageous to the seller, meaning there's a lot of buyer demand around, so the sellers have a lot of choice. And in those conditions, what we'll see is that properties will sell very, very quickly. So the days on market, or the time from when the property is advertised and marketed to the time it sells, is very, very short. We'll also see conditions where properties are having multiple offers placed on them, properties for sale having multiple offers placed on them, and at times the property will actually sell for more than the asking price. So as investors, how do we navigate through, or how do we compete in that market? So I'll put this video together to cover off some tips that may help you in having an offer accepted in a hot market. Okay, so the first one is the number one rule investors have, is that always have a commercial approach. So if you're someone who gets very emotional and forgets their rules, then you really, really need to work out a way where you're going to stop yourself from getting emotional and forgetting about your rules, if you like. So if you're that type of person, then it may be well worth avoiding auctions, because there's a lot of things you can't control with an auction, and one of those is that who you're competing against. And if you're looking to compete against owner-occupiers, then typically they're going to be much more willing to pay more for the property. If it's a property they want to live in and they can see themselves living in for a long time, often they'll be happy to pay a premium to do so. So if you're an investor and you're working to the numbers, then that can be very, very challenging. And the last thing you want to do is get caught up in that emotion and then have an offer accepted higher than you should have gone to, or perhaps more than it will work for you around your numbers. So make sure that you have a commercial approach. Whatever you're doing, always understand the numbers, have some rules and stick to those rules. Otherwise, it can get very, very messy, potentially get very, very messy. So another thing that's really worth considering is understanding why you're investing in the hot market. Are you speculating or are you investing? They're two different things. If you're speculating, what that can look like is you're trying to time the market. So you might think that I'm going to jump in here in this rising market, grab myself a deal, and then sell it sometime later for a profit. Now, there's different ways of doing that, and it may be that if you're in and out in a short period of time and you're in a rising market and those numbers work, great. But you don't want to be caught out. And I've seen it before where people jump in, think that they're going to be, I've seen all these shows on TV, I'm going to develop this property or renovate this property, and it takes longer than they expected. And during that time, the market changes. And what we'll see is that a hot market will stop a lot faster than it took for it to take off. So you really, really want to be careful that you understand what it means to you as far as speculating, if that's what you're going to do. If you're investing, then typically investing is done for a longer time frame. So it's still important to understand why you're doing it, because if you're going to acquire property and you're going to hold on to it for a long time, so you're going to invest in that property, you still need to understand what the numbers look like, because it will very, very quickly tell you whether you're wrong or right. And what I mean by that is, if you even buy a property as a buy and hold strategy, so you're going to acquire the property then hold on to it, and you don't know what the numbers look like as far as what that return looks like and what that means, that property, when you bring it into your family unit, as far as its cash flow position, what you could end up being is like a lot of investors that end up selling within 18 months, 2 years of acquiring a property, because they can't afford to hold on to it. So understand what it looks like. Are you speculating or are you investing? Know the numbers, understand the risks of both, and then decide which one is best for you. But need to be very, very clear on why you're investing in a hot market. Now, another good question to ask ourselves is, why me? Why would the seller choose me over everyone else who's putting in offers in the property? So we need to look through the eyes of the seller and present ourselves how we think that they would want to see us, or what works for them the best as far as having an offer or them accepting an offer. So what we wanted, so if you put an offer in with an agent and you said, well, look, I haven't even got my finance sorted, I've got no idea or understanding of my borrowing capacity, you don't even know if I've got the funds to put down for a deposit, etc., you're going to fall down the list very, very quickly to the bottom of the list very, very quickly. So the other end of that is, well, if you're a cash buyer, then you're in a really, really strong position potentially. Now, not all of us are in a position where we've got cash to purchase a property outright. So the next best thing is to have pre-approval, finance pre-approval. So at least that way you can state to the agent that you've got your finance sorted, you're ready to go, and you're happy to move quickly in the sense that as soon as if the offer is accepted, you can sell on the terms that the vendor has or the seller has. So you want to present yourself in the best way, get ready, be organised, so that you can act quickly and you're not messing around. You're not having the vendor think, well, this person isn't even serious. So present yourself in the best light for the eyes of the seller, which will give you a much better opportunity to have your offer accepted. When it comes to negotiating, there's two main areas. One is price and the other is terms. Now, in a hot market, it's very, very difficult to negotiate on price. It's basically offer full price or go away effectively. So that leaves us with negotiate on terms. And I should say too that it's not often where you can negotiate on both. It's either price or terms. So again, in a hot market, it leaves us really with negotiating on terms. And this can be a really good way to put yourself in the seller's eyes as being more favourable for them to go with or accept your offer over somebody else if you have been creative in what you can offer regarding terms. And that can be things like extending the settlement date to working with the seller. They may be looking to sell because they've bought another property, they've got a job somewhere else they need to move to, but that's not happening until sometime down the track. So you can say, well, look, I'm happy to work in with you around those timeframes. It could be that you offer to pay for their removals costs. If you really like the deal and the numbers work, then putting a little bit extra in around value adding, not necessarily just saying I'm going to offer more than the asking price, but actually coming up with ways that you can value add again around the terms, then that can put you again in a good position to have your offer accepted. And one thing like I've mentioned around paying for removals cost, it could be that you say, look, I've seen that you've got items in your backyard or shed or what have you that you may not want to take with you. Leave them there. We'll sort that out for you as well. So be creative, and perhaps if you can think of different ways that may, again, put you in a better standing to have your offer accepted is really worth considering, particularly when terms are really all we have as potential buyers in a hot market to negotiate with. And when I say negotiate, you're really trying to, again, as we said before, why would they accept my offer? What is it about my offer that is better than other offers that have been presented? So try and be creative around what that looks like, and that may push you to the top of that list and help with having your offer accepted. Something else that can work for you is to build rapport with agents, with real estate agents, selling agents. And what this can look like is basically contacting agents within those areas that you're interested in acquiring a property, and basically putting in an order and presenting yourself. It's almost like putting in a resume. You're saying, this is who I am, this is what I look like as far as, I've got my finance pre-approval, I've got cash, whatever that looks like. This is the purchase price range I'm looking at. Willing to work with the seller on their terms around what works best for them, as we covered off a little bit before, around perhaps if they do need a delayed settlement, happy to do that, happy to chip in some money to help with removal costs, whatever that looks like. So you're pretty much putting in a resume before presenting that to the agent, so that you're in their headspace, if you like, or at least where they can consider you. And it may even be that somebody comes into their office looking to sell their property and market their property with that particular agent, and when they do that and present and they find out about the property, that could be what just sparks that little thought in the agent's mind, and say, well, this could actually work for you, in the sense that from what you've told me, as in us, as in investors presenting our case, presenting our position, the agent could then say, well, this might actually work for you. And then it's happened before. It's happened with me where I've actually had properties presented to me that haven't even been listed yet. So off-market transaction almost, where it's been a good fit because I've taken the time to actually present myself to the selling agent, explain where I'm at, what I look like. I'm real, I'm ready to go, and it just so happened that there's a seller come in. It may be that they're really motivated to sell quickly, so those things can work in your favour as well. If the agent knows that you are primed, ready to act, and you've spoken with them, you're not just a name or a name or a voice on the phone, in the sense that you just haven't rung up and then you're saying, look, this is what I want to do. You've actually presented yourself early. You build a little bit of rapport with the agent, and you're at least putting yourself in that position then to be thought about when a property comes in to be marketed or a person comes in to market their property. At the beginning, I mentioned that we have to have a commercial approach. As investors, it's critical. So I'm going to finish this video on this last point, is that you need to know what your numbers are. You need to be willing to walk away. The last thing you want to do is get caught up in the emotion or not understand what you look like and what the property needs to look like for you to be able to sustain that property in your portfolio. Now, otherwise it's just going to become something you regret doing, and it can set you back, not only financially but also psychologically. You can think that property doesn't work or you're not right for property investment, and it's not the case. So we know that every wealthy person has used property in some way, some form, to increase their net worth and to get wealthy. So it works. It's just our approach to it. So really, really be willing to walk away. They say that the deal of a lifetime comes around every month. It's true. There's always another one to go to. So don't feel like you have to jump into a hot market. If you feel like you're going to get caught up in that, just wait. You're better off waiting X amount of months or whatever it may be for the market to cool than to jump in and regret it later. It can really, really set you back. So have a commercial approach and be willing to walk away. Don't do it to yourself. You need to be true to yourself. You need to be true to your rules. If you are a person who gets emotional, spend time sitting down, working through the numbers, get someone to help you with that, understand what your cash flow position looks like as far as your family unit, and then look at any potential property you're going to bring into your family unit as far as what that looks like from a cash flow point of view, and is that going to work for you? You don't want to do what a lot of people do and not understand that, and then find out 18 months, 2 years, whatever it is down the track, that you just can't afford to hold on to the property. That's a real killer as far as wealth creation, because it does set you back. So commercial approach, be willing to walk away. Seriously, be willing to walk away. Well, I hope you found that information helpful and you'll be able to take some ideas from that around how to have an offer accepted in a hot market, but also equally what it needs to look like for you as an investor as well. That's equally as important. So thanks so much for sparing the time. I really appreciate it. If you liked the video, please feel free to hit the like button, and equally if you haven't already subscribed to my channel, it'd be great to have you on board, and look forward to being able to share more free information with you on an ongoing basis. So look, thanks again, and whatever you choose to do, I wish you all the best on your journey. Thanks so much.